morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 17th. Hope you guys are having a great day. As you can see here, we do got a number of economic data here. We'll start off with the housing starts for the month of November. So in October, it initially came out at 1.53 million. However, it had a recent revision, slightly down a little bit to 1.528 million. These are analyzed units. Forecasts were supposed to remain about the same at 1.53, and it actually increased to 1.547 million. So we had a nice increase in terms of housing starts, so new construction. Now, its counterpart for future housing starts, we got the building permits for the month of November. Its October reading came in at 1.544 million annualized units. Forecasters have supposed to have a slight increase to 1.55 million. However, it went upwards even further to 1.639 million. So far, housing looks pretty good here, but it'll be interesting once we get the December reports, as we saw a bit of a decline in terms of the confidence level from home builders earlier this week. So it'll be interesting to see what the December's numbers will come out with on this. We also got the Philly Fed Index. This is the manufacturing data out of the Philadelphia region. We had anything above zero is considered expansive, and we had a really nice one at 26.3 back in November. Forecast account for a slight decline to 20, and it had a much steeper decline to 11.1. So obviously not very good numbers right there. Jobless claims. Last week, the report came in at 853,000 people applying for unemployment for first-time benefits. However, it did get revised a bit higher to 862,000. Forecast is supposed to show a downturn of a decline all the way down to 800,000. However, it went upwards to 885,000. So overall, we got kind of a mixed report here. We're seeing jobless claims going up instead of going down. We're seeing manufacturing declining. However, on the housing side of things, we're seeing some improvements on there. So we got a mixed bag right there. So let's jump overhead here to the headline news. Stocks are up so far this morning. The big ones, or well, a little bit of it yesterday. We had the Fed meeting. They will continue purchasing mortgage-backed securities through probably like 2023, until basically everything is in the clear. But the big one really today is it's appearing more and more that some type of stimulus check may be coming in before end of the year. So, or at least some type of stimulus package. Mitch McConnell basically told the Senate that they should probably plan to stay in over the weekend, and normally they had tomorrow as a hard date. Now they said they're pretty close to something. They just need to work out details of what's going to be in the bill, and they're encouraging their counterparts to kind of stay and work on it and get it wrapped up for by next week. So we'll have to wait and see again if they are able to come together and get something out there for people. Let's jump ahead here, see how this is playing out with mortgage rates. Mortgage rates, as you see, we saw some steep swings here. We were doing pretty good with the Fed talking earlier. We're down below this 25-day moving average. But when they start talking about stimulus, we pulled way back down here since this morning. So when rates were up, we had improvement on the East Coast. Earlier in the morning, there was an improvement. However, East Coast may have had, depending on when the rate sheets came out, may have had negative reprice, and basically we were priced where we were yesterday. So basically these last 3 days should be about the same price of what we have been seeing right now, what we're looking at right now. Yields are again upwards, working its way up. We're just below 0.94 now. It did test when we had that high down to the 25-day moving average, just double layer of support. However, it did rise once the stimulus package when there's more optimism with the stimulus package at 0.94. We're initially at 0.936, if that makes sense. Sorry about that. So anyways, this is kind of where it's at, where the stimulus package will basically hurt rates a little bit, primarily because that means there'll be more debt out there, more supply of treasuries, but probably not enough demand out there. The Fed didn't announce how they're going to go ahead and purchase. They're going to, if it's going to help as much as we need it to help. So it's going to help balance itself out for the most part. All right, so I hope that makes sense. I'm sorry about that. But anyways, I hope you guys have a great rest of your day. If you guys have any questions or anything about anything in regards to mortgages or anything, I am a loan officer. I do work with a national company. We can certainly help you guys out. Many different things. We can answer questions for you as well as help you with the refinance needs or even purchase needs. So if you guys are looking to get pre-approved and finance your next property, we can help you with that. If you guys are looking for get a better rate, take advantage of the ultra low rates we're getting right now, or if you want to go from a 30-year to 15-year fix, or just simply need to take some money out of the equity of your property for different plans you guys may have with it, please reach out. We can help you guys out with those. You guys have a great rest of your day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye bye.